Good afternoon and happy Thursday, everybody. It is Scott Wohlers with River Place Capital. It is Thursday, April the 23rd, and I just wanted to take some time to check in, talk about what we've seen, and wow, what a historic week we saw this week in the oil markets. And wanted to take a few minutes and kind of just break down what happened in the oil markets and then how that had a ripple effect into the stock market uh, going back into the early part of this week. So at the end of last week, we actually ended the week last week on an uptick note. We were up for the week, and then we woke up and saw overnight on Sunday evening into Monday morning that the May contracts for oil were really being sold off hard and were starting to go down and down and started off at 20. We're moving down to 12 to 10. And you saw unbelievably, for the first time ever, you saw oil contracts for the next month. So there was the May futures contracts were down and closed on Monday afternoon at below $37 a $37 for the contract. So does that mean that oil was actually selling at negative $37 a barrel? No. What you saw on Monday was a financial issue. It was not an oil issue. And what you saw is in 1/100th of the futures contracts, which means I'm agreeing to buy a thousand barrels of oil at a specific price for the next month. What you saw is you saw sellers trying to sell that contract to buyers, and there was nobody in the marketplace to buy it. And when it settled at the end of the day on Monday, it meant that I would actually, if I owned the contract, instead of you paying me for the contract, I was going to pay you $37 a barrel in my thousand. So I'm actually going to pay you $37,000 to have this contract here. Now, that is a financial market anomaly. That is not what is actually happening in the oil market, but there is a lot that's actually going on in the oil market that I wanted to talk about. We've had kind of a black swan event, if you want to call it, in the oil market for the past month to 2 months, and it's rippling over a little bit into the stock market. And I'll touch a little bit on that in just a moment. But going into this, we were wide open producing millions and millions of barrels of oil a day. It's going into February. And what you started to see in February is a huge slowdown in demand from the Chinese due to the Chinese shutting down the global economy. So all of a sudden, they're huge oil users. And we're producing all of this oil across the world. And now we've seen a huge part of our demand start to shrink. And then as we look into March and April, we have essentially shut down the United States markets for oil as well as Europe. So we have all of these producers that have not shut off their wells that are still continuing to produce at the same levels that they were back in January, creating a huge oversupply of oil. All while this is happening, the Russians and the Saudi Arabians are getting into a price war, could not come up to an agreement last month in an OPEC meeting on oil production being cut. And so what the Saudis actually did was produced even more oil. So what you are seeing now is you are seeing tankers being parked off of the coasts and refineries that don't have the room or the capacity to store the amount of oil that is being produced. So one of two things happen. Either if we don't shut down production, price continues to shrink because the demand is not there to support the price of oil. So this is going to have some ripple effects as well into the economy, and that's why into other aspects of our economy, and that's why you saw stocks sell off Monday and Tuesday off of the historic moves in the oil market, because a lot of the U.S. producers that produce oil in the United States are very heavily debt ridden. So what you also saw is as the oil was being sold off a little bit, you saw banks being sold off more because the banks are the ones who hold those loans. So, and then on top of that is because they're so highly leveraged, if they have to shut their wells off or if they have to stop producing, you then see additional layoffs to the amount of unemployed people that we already have in this country, and that has an impact overall on our economy in a negative way. So oil is really having a huge impact right now on the stock market and what's going on, as well as our overall economy. even though it only makes up 2 to 3% of the S&P 500, the ripple effects that come from oil are much, much greater than that 2 to 3% that's going on. So also wanted to talk a little bit about what's been so very different about this recovery and this market than what we have seen in the past. Typically, what is held up in the past when you go into a bear market territory is your value stocks aren't growing as fast as your growth stocks in a bear market, but in a bull market. But in a bear market, they tend to hold up much better. And that has been the case for every bear market that we've seen in history until this one that we've seen this year. This year, what we've seen is in this big 30% dip in the market and hence recovery of upwards of 50%, it's not been your value stocks that have been defensive or helped you through this. It has actually been your growth stocks that have held up better and have recovered quicker than your value stocks. And this is bucking a trend that has existed as long as there have been bear markets and studied of bear markets. So something interesting to point out, something that we at River Place have adapted to, have seen and adjusted to, and have modeled our portfolios to do what's best for our clients and help us recover out of this as quickly as possible. So you have questions about what's going on in the oil markets or what's going on in your portfolio or how better to position yourself to get out of this market, feel free to give us a call anytime at 904-346-3460 or visit us online at www.riverplacecapital.com. I hope everyone continues to stay safe and have a wonderful rest of your day.